you look at our track record, you can actually see that last December when the market tanked about 17 to 18%, we made a nice return. And then, in May too, when the market sold off, I think it was just shy of 8%, we made 2.2%. So, we're never going to get the same alpha that the general overall market does on a monster year like we've had this year. Okay. But
except for today's trade, we're going to outperform SPY 2-1 if it goes up with this trade. I think you guys are going to like it.
Nice. Okay, guys, I'm going to let Jason take back over here, and we'll go ahead and get started.
Thanks for getting everybody ready, Dean. Let me go ahead and put the screen over here, and we'll review today's trade for, let me see, how do I switch the screen over?
So if you go to the top, Jason, and then hit share. It's a little green icon, and that should switch it right back to you.
Okay, let me see.
And I'll let you know when it is switched over to you.
Okay, oh, there it is.
There you go. Okay, it's back to you, bud.
All right, guys, thank you so much. I'm going to go ahead and start off by just placing our disclaimer up before I get started here. If you go to your email and your phone, you should be receiving our trade alert any moment. And for members been following for a while, I think you're going to notice that it's significantly different. Same amount of legs as last trade, but let's take a look at it. So I'll go ahead and pull that up now. First, I'm going to start by reading the trade alert, just to be very clear, and then we'll look at how beautiful the risk to reward ratio is on this trade. Now, the bottom line is our normal setup just wouldn't work out today. And that's because for some reason, we'll talk about why, the banks are unwilling to underwrite put options. So this has driven the price of put options sky high. Now, can you see my screen, Dean?
Yes, Jason, looks good.
Okay, great. So this has set up a unique opportunity for us to be in the business of selling put options today. So the first step, if you took the Monday trade, will be to close out the previous trade alert, which unfortunately was a tiny loss. We've had a lot of wins on the SPY, as you can see in your trade alert, and feel free to go through those. We're up a little bit this morning.
Yes, hi.
See, I'll go ahead and mute all until we go to Q&A. So the first step is to buy to close the call option we sold, which is the 321 call expiring today. Sell to close your 320 SPY put, also expiring today. And then sell to close your December 23rd 321 SPY call. Okay, and that exits your previous trade alert completely. The next step is going to be to sell all shares of the SPY. Now, this is not because we think the SPY is going to tank. It's simply because there's a huge opportunity to sell put options today and use that to finance an in-the-money call option. And you'll see we're going to be able to really have the best of both worlds with this setup. The new trade alert is visualized in this risk graph, which I'll zoom in on. And what I want to note is we can actually break even on this trade if the SPY travels all the way to 318. So we have $2 of downside protection just to break even. On the same note, if the SPY does go up by $1, we're going to earn $2. So this is a very unusual trade. It's because the big banks are frightened about liquidity issues going into the year end. So if you've been hearing about repo madness, about how the Fed's going to inject $500 billion into repo markets in the next 30 days, it's because they are frightened that they're going to run out of dollars over this period. So I believe that's probably why they're unwilling to sell put options in the next month. Now, we're not seeing a lot of put option buying, probably because it's so overpriced. It's literally 3 times as expensive to purchase downside protection today as it is to buy a call option the same distance. So we're essentially going to use your capital instead of buying shares of the SPY and then selling call options. We're doing the opposite. We're going to be in cash and we're going to sell the 318 put and then purchase the 316 put. So we're not just outright naked selling put options. So it's more of a spread. Then we're turning around and buying the December 27th 319 call. So to summarize what all this means, if we sell the 318 put, we're collecting 72 cents. And we're essentially agreeing to put in 100 shares at 318, most likely if the SPY were to travel below that. But we're protected to the downside with the 316 put. So this means we have another underwriter who's willing to buy the shares back from us at 316 if we're forced to purchase them at 318. Now, when we buy the 319 call option, we're long, and that's an in-the-money call option. So that's how we can actually outperform the SPY to the upside. We don't lose if we just go down $1 or $2. And if the SPY absolutely craters between now and Friday, which is highly unlikely but possible, our loss is cut off at around $2.50 a share. So let me pull up the live risk graph so we can look at this. And we are up to 23 people live. I'll open this up for Q&A in one moment. Let's just review the trade one more time from head to toe. So if I sell the 318 put, I'm agreeing to purchase 100 shares of the SPY, no matter how low it's gone, on Friday for 318. So this will utilize $30,000 and $1,800 worth of capital. Now, in return, we're getting paid 73 cents a share or $73 a contract. Now, we don't want to just be outright short the SPY by selling that put option. So we're also turning around and purchasing the 316 put. And this is what gives us a limited downside risk. So we'd actually need the SPY to travel all the way to 310 to hit our maximum loss on this current trade alert. And then on the other side of the trade, for every dollar it goes up from where we're at, we're outperforming the SPY. So you can see in this example right here, if we go to from 319 to 321, we're going to actually generate a $200 profit. So if you're just long the SPY, you would only make a $100 profit from a dollar move with 100 shares. So we're actually outperforming the SPY 2-to-1 if it does travel higher. And on the other side of the coin, if it travels lower, we're not losing at all until it's dropped by approximately $1 is where we break even. And then from below there, we hit a sharp cutoff at 316, where we would recognize a $2.24 loss. And then after that, it gradually loses, and we'd have to go all the way to 310 to hit our maximum loss of 290. I'm going to be right back to see if I get that noise outside off. I'll be right back. Dean, do you want to take over the audio for a minute?
Sure. I actually can't hear anything on my side, Jason, but if it's distracting, I absolutely understand. All right.
Okay,
yeah.
good. Well, I'll just continue then. Let's go ahead and open up for questions. I know this is an unnormal trade. It's far more attractive than any trade we've done in quite some time. And it is taking advantage of this overpriced put options.
So
Okay, so let's see what
70
questions we have.
cents debit about normal.
What's the question? Sorry, I didn't hear that.
About 70 cents debit. Is that about what you got?
Yeah, let me double check with the open ticket. So yeah, right now this is coming in at 97 cents, it looks like.
How come yours is so much higher? Sell to open. 318 put. Buy. 316.
So sell to open. So in our portfolio, which is just over $1.4 million, we're 40% in the SPY. This represents 1,900 shares. Now, again, I had to liquidate my shares of SPY to have the capital free to sell that 318 put. Now we're protecting it to the downside with the 316 put. And then we're turning around and buying a longer duration long call option that's in the money at the 319 expiring December 27th. So just make sure you got all the dates right. You might have accidentally put the December 20th call, which would bring it right to 69 cents. I bet you that's what you did.
Okay, 95 cents debit.
So yeah, we want a little extra time premium on our long call option.
20th and 20th. Okay, got it.
So yeah, stock speculators are going wild and the underwriters love it. They're selling options at a discount. But on the other side of the coin, they're unwilling to put up the capital necessary to sell put options. And again, it's because there's a huge fear that the US banking system is going to run out of liquidity going into the year end with tax payment. There's a whole host of things that are supposed to lock up the liquidity in the banks, which is their excuse for going into this massive repo procedure in the next 30 days. In fact, it's $500 billion.
Okay, got it.
And now I do see quite a few people in here, 22 live, welcome. I'm gonna go ahead and unmute a few folks that are not yet. Henry, how's it going? Henry, I haven't seen him in a webinar in a while. I unmuted you.
Jason, how does the dividend on Friday for the SPY play into this?
We may not get the dividend on Friday because we're not going to own the shares with this setup. And if these options continue to be priced this way, I'd prefer to trade it in this manner. And again, this is much more, one trading period with our strategy is far greater than the dividend that you would collect.
So it's not the dividend that's playing games with the put prices? Okay.
No, it's not. No, it's not.
The way I figure it's the dividend will probably pay about $1.50. So that would knock the SPY down $1.50 from where it's trading right now at the open on Friday morning.
That's a good point. I'll definitely look into that after the webinar. Yeah, the put options are very overpriced today.
Hi, Jason. This is Scott.
Hey, Scott, how's it going?
Doing good. I'm brand new here. Sounds like most of the people I've heard so far are pretty experienced with you, but I was wondering if you could show a scenario of what it would look like for somebody just getting started with the minimum investment required.
Sure. Yeah. Great question. So normally we are buying 100 shares of the SPY, selling a call option and purchasing a put option. And so this trade setup is actually doing the opposite. Instead of owning the SPY, we're selling the put. And this is so that we have a better risk to reward ratio going into Friday. Mm-hmm. And also it's the quad witch. So there's a whole lot of options expiring on Friday, which can create a substantial amount of volatility. Now the dividend paying out on Friday could definitely be priced into the put option right now. Certainly, but My forecast is that the SPY is going to travel significantly higher. So I want to be able to outperform the SPY to the upside while still having a very limited downside risk. And we just weren't able to create a trade setup today that would achieve that by owning the SPY. So this trade setup will potentially miss out on that. It will miss out on that dividend on Friday. However, it gives us all the security to protect against downside risk and gives us ability to outperform to the upside 2-to-1. So this is a little bit different. Let me open up the trading plan so we can review how you would get started if you're new.
What's the minimum to get started on this strategy?
Yeah, so if you wanted to just follow the SPY trade alerts, you would trade Monday, Wednesday, Friday, and you'd have to have the capital to purchase 100 shares of the SPY. Now that's going to give you a much more volatile return than if you follow the full program. So if you follow the full trading plan, it costs $75,000 to build the portfolio. And the best way to do it is just build the position each day as you enter into each trade. So you would potentially buy the SPY trade today. Now this is an abnormal day because of the put options being so expensive. Thursday, you would build your TLT GDX position. And then the following Tuesday, you would build your emerging markets position. And that would build out your full portfolio. And what's important is these assets are all uncorrelated. So if we can predict the general move in each asset over a longer period of time, it allows us to have a very smooth return. And unfortunately, I was unable to update our returns on each strategy today, just because of this oddball option pricing. But yeah, this is typically in any individual portfolio, you'll see we have about a 75% win rate in terms of generating a profit each month. When you combine all 4 strategies, we've had only 1 losing month. So around a 92% win rate per month when you do overlap all the strategies together.
What would you give advice to someone that doesn't have the 75,000 to get started? I thought I remembered previously you used to say something like 25,000, but I don't remember.
There's 2 good options. If you really want to have a balanced stock bond portfolio, then I would do the Tuesday, Thursday trade. And we do have a different slide I can send you to how to balance that. But essentially you would have, I believe it's 400 shares of emerging markets and 100 shares of the TLT. And that would help you get a very level strategy where you're equally weighted in stocks and bonds. And so that's really the most important factor to how our program works and how all major hedge funds operate. So we're not, this is not something this is very, very similar to Ray Dalio's portfolio, but we're adding options to make it even more lucrative and more defensive for retirement portfolios. So this asset allocation right here is extremely close to Stanley Druckenmiller's exact portfolio allocation as well as Ray Dalio's. But they're managing tens of billions of dollars, so they can't take advantage of the option market like we can. Mm-hmm. So if you want to have a stock bond portfolio that's equally weighted and you don't have 75,000 to invest, I would recommend the Tuesday, Thursday trade. Or another option that a lot of people have enjoyed, just realize, even though all 4 strategies have a very similar 12-month return, if you're not worried about having a 92% win rate in terms of generating a profit every single month, then any individual strategy has performed very well. So you could just follow the SPY trades Monday, Wednesday, Friday to get started. And then as you are able to build more capital, jump into the Thursday trade on the TLT.
And if you did just the Monday, Wednesday, Friday SPY trades, am I correct that that would be a requirement of around 30,000?
That's correct.
Yeah, about 33K right here. So really, on either the minimum systems, bud, it would be about 35K, Scott.
Yeah, I hate to be asking in terms of minimums, but just getting
Oh.
started and wanting
Yeah.
to actually try to start building some capital up. That's kind of where I'm at.
Sure. No, and thank you for the honesty. And yeah, a lot of our clients, start small and slowly scale up once they get comfortable. And
Well, this is the
you
first
know,
time I've even started talking about any sort of trading strategy since getting absolutely annihilated back in 2008 and 9.
okay, gotcha.
So took those many years to get back on solid ground.
Sure.
Unfortunately, I missed an incredible amount of upside during that period. Can you give me a hypothetical if somebody did just do the Monday, Wednesday, Friday SPY trade? What kind of hypothetical profit margin could you be potentially looking at?
Yeah, well, we're always targeting a 1% return per month, but some months we outperform. So that's really the option callers or what are controlling the risk. Okay, I do have some questions. Okay, but yeah, so yeah, we are totally aiming for a maximum risk or reward each month of 1%. And as long as we can predict the general trend of the market, that is how we're able to have such a high win rate. So here I can pull up. So you can see we have had some months where we've pulled a little bit higher return. And remember, these returns are being, anytime the market's going up, our TLT and GDX position is going to be dragging on the profit. And anytime stocks go down, the SPY will be dragging on our profit, most likely, and the TLT and GDX are traveling higher.
Right.
And so if you do want to have an extremely high win rate every single month, then that's when you're going to want to have the stocks and the bonds. And the typical relationship is that when bonds go down, stocks go up. And here I can show you that visually, just so you can see how that works. And so you can see when once that little drop down goes down, when the SPY goes up, TLT, which is the orange line, tends to go slightly down or flat. But when stocks tank, all that money floods into the safe haven of bonds. And so it's that relationship which will really weatherproof your retirement portfolio and make it very hard to have a losing month. And so just in general, the SPY likes to melt up almost all of the time. But on the other hand, the TLT likes to just kind of drift sideways most of the time. And it's when the SPY viciously sells off that we get the vicious spikes on the TLT. So it's when you overlap those two that makes the core of this strategy really work.
All right. Thank you very much for answering my questions.
Yeah, sure. And here's another chart of the TLT. So you can see TLT most of the time, there's a whole lot of red bars, aren't there? But when it moves, it really moves to the upside. And in general, the higher the TLT goes, that means credit's getting cheaper and cheaper in the US, which becomes more and more bullish for stocks. Of course, this only works until we get towards the zero bound on interest rates. So I believe unless the US is willing to head into negative interest rates, I suspect the TLT will top out somewhere in the 180 to 190 range. And the higher this goes up, you got to realize it's going to be fostering huge amounts of misallocation of capital and really fuel stock market bubbles because it means credit's getting cheaper and cheaper and cheaper. And the catch is that the Fed knows this and they know they're trapped. If they do let the TLT drop, it's going to cause a whole lot of selling in the bond market, which can make it very expensive for the government to fund their deficits, which are continuing to grow. This coming year, we have $1 trillion deficit to fund.
Just kidding. I know. Yeah. at my text.
No.
Oh, you don't see it when it's right in front of you.
Okay, so let's make sure we all understand the trade. Let me read this. Okay, so the guest wrote, so are we selling all the SPY? Are we holding and not taking a covered call instead of selling puts? I'm out of emerging markets, called away, so I
Sorry,
rebuy.
I spent the money.
Okay, so
Spend what
yeah,
money?
yesterday we did rebuy emerging markets.
Oh, shush up.
A put option to it, so I can pull up that trade.
Love you, bye. Why? Well, first of all, I didn't know about it till an hour ago. Didn't know it was something I was supposed to be going to.
Oops, I'm not sure if that was for us. Okay, so yeah, let me go over the trade alerts. So step one is to buy to close the previous trade alert, the SPY short call, sell to close your long 320 SPY put, sell to close your December 23rd 321 SPY call. Step two is to sell all shares of the SPY. Okay, I've muted everyone, Don, until I go through this one more time. So yes, we're selling all shares of the SPY in step two, and that's because we want to take advantage of the premium available in the put options today. So per 100 shares of the SPY you originally owned, sell to open 1 December 20th, 2019, 318 SPY put, buy to open 1 December 20th, 2019, 316 SPY put, and then buy to open the December 27th, 2019, 319 call. And so let me pull up the risk graph, the live risk graph. We break even if the SPY sells off nearly $2. So it can go exactly $2 lower, or rather $1.85. If the SPY pulls back $1.85, we break even on this trade alert. However, if the SPY travels higher, we will outperform the SPY 2 to 1. So if we just look at this example right here, and while I do realize we're missing out on the dividends, again, I'm expecting a very bullish move in the SPY. So I want to design our trades to have limited downside risk and to outperform the SPY if it travels higher. This allows us to outperform buy-in holders with a lot less risk. And so there's just no way you could engineer this trade while owning the shares today. And that's because of the put options costing so much. So if we do look at this, we can see we go from 319.83 to 321. That would normally be $1.20 profit per share, or $120 profit if you were just long the SPY. If with this setup, we'll be up $210. Now, if we do travel to 322, if you're just buying and holding the SPY, you'd be up $220. However, with this trade setup, we would be sitting on a profit of $300. And on the other side of the trade, if things do go the wrong direction, we can afford a $2 pullback without having any losses. So if you're just buying and holding, I guess you would potentially have a $1.50 dividend on Friday, but you'd be just long the SPY, and who knows how far it could drop. So we're protected. Really, our losses dramatically slow down at 316. So we would need the SPY to drop by almost $3.80, and we would only lose $2.30. And then from there, it really slows down. The SPY would actually have to crash to $310, which is nearly a $10 loss, or $1,000 per 100 shares of the SPY. And our losses get cut off at $2.92. So we have extremely low risk to the downside. We don't even lose money if it only drops $2. But on the other hand, if the SPY does travel higher, which is what I suspect will happen probably for the next several months, then we're going to outperform the SPY 2-1. So does this make sense? Let me go ahead and open it up for questions one more time.
Is rare. But when this situation does occur, and I'll prove that it could at
We got a lot of guests joining in. I'm going to go ahead and unmute all the guests.
largest gains in stock market history. Over the first 24 hours, it's possible to see gains up to 1,000%. Over the next 12 months, gains of 3,000 to
Okay, everybody able to place the trade? Any questions?
That was so funny.
Okay, we got a question. If you sell all SPY shares and you're predicting 360, wouldn't you be buying back at a higher price, thus defeating the purpose of the strategy? No. So as you can see, we'll outperform the SPY by 2-1 with this trade. And this is just from now through Friday. That doesn't mean we would necessarily do the same trade every day. We're just taking advantage. Rather, we're avoiding paying for an expensive put option when we don't need to.
Hey, Jason, do you want to mute everyone, bud? We got some infomercial playing in the background or something.
Okay, I think I did. Okay, we should be good now.
Yeah, perfect.
Okay, great. Now let's see. A few hands raised. Let me go ahead and allow those to talk.
You have a couple questions in the chat box too.
Okay, why not do a strangle instead? Higher price, that's defeating the strategy. So yeah, I think the trade's pretty straightforward. We have downside protection, so we can't get hammered. The SPY can drop $2, we break even. If it goes up, we outperform the SPY 2-1. And if the SPY crashes as much as $10, we only lose a maximum of 3. So that's very attractive risk to reward ratio. We win in multiple directions, and we're taking advantage of the dividend date and also the bank's unwillingness to sell put options. There's very little put options being sold, and the prices have gone sky high on that. So we're taking advantage of all this. Come Friday, we may not do the same trade. We may go back to our normal trade after the cost of put options isn't inflated by that dividend, and also the lack of willingness of banks to write put options. Any questions before we continue? You could do whatever trade you want out there, guest. I mean, that's totally fine for you, but this is our trade alert. If there's any questions about it, definitely. I think maybe you're just trying to avoid having to have the 30,000 by what I'm listening to type of questions. So certainly if you want to do a more speculative trade, you could do some of those, but this is always trying to take advantage of having at least $30,000 in capital so that we can sell an option. Now, normally I prefer to buy the asset and sell a call option, but today it's much more lucrative to sell the put option and then purchase that in the money put, or rather in the money call. Okay, I'm gonna go ahead and continue on unless we have any questions. Let's see, Karen, did this all make sense to you? Henry? William? Tom?
I had to look at it a time or two, but yeah, I see what you're doing.
Okay, great. So I got 2 guests with their hands unraised. I'll unmute both of you. If you want to ask questions, please go ahead. I think you'll have to unmute your mic though. Oh, Tom, I think your microphone's the one making that odd noise. So I did have to mute you there. Sorry. Okay, so one guest writes, why are put options so juicy? Well, I think one of our attendants actually nailed it on the dividend. That's certainly going to be priced into the put option today. But also, there's not a whole lot of put option buying or selling occurring. And I believe that's because the banks are typically who are willing to underwrite selling put options, because it puts you on the line to buy a huge chunk of stock. And the big fear is that the banks are going to lock up and not have liquidity through the end of the year. So that's why we have the repo madness, and why the Fed's injecting $500 billion into the repo market over the next 30 days. So there's a guy named Zoltan who used to work for the Fed, put out a big piece talking about how this was going to play out in the next 2 weeks, and that there's just not enough liquidity in the banking system to keep all the transactions moving smoothly. And that's because after the 2008 crisis, the regulators came in and have piled regulations on the banks, making them safe to a degree, but it's also made it so it's hard for them to have liquidity. And at the same time, the US Treasury has been creating a huge surplus of debt, $1 trillion, more so than ever in history. So they're having to purchase all this because they're the primary dealers. And so there's just a big concern from here through the end of the year that there could become a crunch where broker dealers have no access to overnight lending, and that we might get some sort of stock crash. So that's why I don't want to have unlimited downside risk, even though I'm bullish, knowing that these banks are about to get their hands on $500 billion in the next 30 days. Okay, great. Well, let me go ahead and continue on. I think everyone understands the trade, sees the risk to reward. And again, we have unlimited potential to the upside. We have a break even if the SPY travels $2 lower. If the SPY travels $4 lower from current price, we're only going to lose half of what buy and hold investors are going to lose. And if we crash $10, we're only going to lose 30%. So that's a hard deal to beat. Outperform the SPY 2-to-1 on the upside, break even for $2 of downside risk. And then if we do lose the first $4, we only lose half. And after that, it dramatically slows down. In fact, you can go as far as you want. You never lose more than $2.95. So it's a very controlled trade and protects our position. Now, on the other part of our portfolio, we're long the TLT. So we'd actually love nothing other than the SPY to tank to below 316, because that means our TLT will jump up considerably. But on the other hand, if this trend continues and essentially we see banks continue to buy up the debt, but trying to keep these yields higher because they know what's headed in 2020, and that's lower interest rates, well, then we're looking at a huge potential move in stocks. And so I think potentially we hit 360 on the SPY until we get that 10-year yield above 3%. And that might be what causes the next sell-off. Now, so far, we've seen very small pullbacks in the bond market as the stock market continues to climb higher and higher. So we're kind of getting the best of both worlds at this point. All right, let's see. Any questions from the crowd before we continue? We've got a few hands. Go ahead and use your chat box for now, just because we've had some weird sounds every time I unmute everyone. Don Smith has his hand raised. Let me go ahead and put you on the panelist, Don. Go ahead, Don. Now your microphone is muted right now. Okay, well, let me go ahead and continue. So I'm going to review the general strategy, jump into the news, and then go back to Dean. This is the Ray Dalio, Stanley Druckenmiller portfolio, but added with a whole lot more protection, taking advantage of the options market. Just making sure we got our audio. Okay, good. The trading plan is best to enter the trades the day of the trade and to immediately enter into the options with it. The options really make it difficult to lose money and protects your position. As you can see in today's example, we've engineered a trade where the SPY can go down $2 and you break even. The SPY can go down $4. You only lose half of what a normal SPY holder would lose. If the SPY goes down $10, you only lose 30%. And the further down it goes from there, our losses are limited at $2.95 a share. But on the upside, we will outperform the SPY at a rate of 2-to-1. So that's a great setup for today's trade alert. And we will roll this position over on Friday. Now, on Friday, I will go over our schedule because we do have a holiday next Wednesday and the following Wednesday. So Monday's trade alert will be closed out and designed to trade through that Friday. And then the following Monday's trade will also be designed to do that. In fact, let me just pull up a calendar so I can point this out for everyone so we know what's coming up. So on Monday, we'll be placing a trade that will expire on the 27th, and we'll be skipping the 25th. I'll be hosting webinars the 23rd, the 24th, and the 27th, and only taking off the 25th and the 26th. Now, the 26th, I will send out a note and update you on our position. My expectation is we will continue to buy and hold our long TLT GDX position as well as our long put. The following week, we have the same schedule where we will trade on the 30th and close that position out on the 3rd, skipping New Year's Eve on the 31st, skipping January 1st on New Year's Day when the market's closed. So that's just some scheduling differences. Normally we do trade 3 times a week. So if you're just jumping into the program and you do want to follow it, again, enter the equity the same day of the trade alert with the option caller all at the same time. This is what really protects your position. And even though we could just simply be long the SPY and the TLT and do very well, we're able to get the volatility down to less than 1%. The biggest loss we've had in the last 13 months is only negative 1%. So we've had profits in 11 of the past 12 months. One was a break even. Largest drawdown in a month is negative 1%. We've never lost capital over a 90-day period. And again, when the market heads lower, your TLT is going to be the payday. Put option kicks in on the SPY, limits losses, and then we generate a profit with the TLT. When the SPY travels higher, we're going to generate profits on our SPY trade, but we're probably going to see a little bit of a slow bleed on the TLT. And it's when you combine the two strategies together that you can win in almost every single month.
Hey, Jason, just wanted to make sure you saw this this question that came in here too. Let's see here. I lost the question here. I think the person jumped off the webinar, so we lost the question. Never mind. Sorry about that.
Okay, great. Okay, so let me jump into the news and we'll put it back to your screen, Dean. Okay, so normally I do have a overview of all of the different positions, where they stand, but I did get a little bit behind today designing this trade to take advantage of the put options. And I do think it's one of the more lucrative trades we've had to date. Next party trade alert has all of our previous trades since November 1st. And if you do want to go farther back, just click on any of these links. You can go back for the entire 13 months. we review the trading plan. Again, it's 100 shares of the SPY, 200 shares of emerging markets, 200 shares of TLT, 200 shares of GDX. This makes you very safe, very uncorrelated in each aspect of your portfolio. Next thing I offer in the trade alert document is how to place the trade. So step 1, close our previous trade. If you didn't take it, skip to step 2. In step 2, we're actually going to be selling our shares of the SPY in today's trade. This is not normal, just taking advantage of that juicy put option today. And again, we are selling the December 20th 318 put, buying the December 20th 316 put, and then buying that in the money 319 call expiring December 27th. So that long call has a further expiration than the other part of the trade. And that's how we can outperform the SPY if it travels higher. The final thing in each trade alert is going to be your risk graph, which we've spent quite a bit of time on. And what's important to understand is if we look up and down, that's your profit loss. And then if we look left and right, that's the value of the SPY. So if the SPY goes lower, you can see where it ends up at the profit loss. If the SPY goes higher, you can see where it ends up at the profit loss. Okay, now I'm going to take a look at the news, and then we'll roll this back to Dean. In 2020, the Fed, ECB, and Bank of Japan will all be conducting quantitative easing simultaneously. Now note, China is not in that bag, but we have a massive amount of capital flooding into banks in the early 2020 and to close out the rest of December. So I'm expecting equities to fly high, gold to go up, and emerging markets to go up, and for there to be maybe a flat or slightly down move on the TLT. Now, if we do see the TLT significantly sell off, that could be an early warning sign for stocks, because the last time we had a big crash in US equities was when the 10-year yield jumped above 3%. So that was in October of 2018. And we all remember what happened after that. We ended up with the Christmas massacre and huge amounts of volatility in stocks. So a little bit of spending in China. If we could get China to expand its debt, that would make this bullish picture on equities a little more clear for 2020. While we do have the banks stimulating the economy by printing money at record pace, the big wild card is how fast is China's GDP going to crash in 2020? And so they've run out of schemes to create high levels of GDP since 2010. That's really when their crisis began. And they've been just trying to deal with a lot of bad investments for the past decade. And so that's what is really scaring all the central banks into printing all this liquidity. So we're carefully monitoring whether China is going to essentially bite the dust and let their economy slow down, let GDP really tank. And if so, your TLT is going to really deliver a big profit. We might see emerging markets sell off first, and then eventually potentially see it sell off in US equities. And that's kind of what we saw at the end of 2017, is when emerging markets started to sell off, but US stocks continued to drive higher. So we can look at China as a warning sign for what may be headed towards the SPY. So even if that were to begin, if emerging markets were to tank, China's GDP were to tank, they don't want to issue more debt to continue all these projects they like to do, then we might have a good heads up from emerging markets. So it's good to see, if we want to be bullish on equities, it is good to see China printing more money and continuing these infrastructure projects, which of course I always critique. China injection, Asian bourses trade mixed overnight with a host of unknowns still clouding the US-China trade deal. And as the People's Bank of China injected $29 billion into the financial system before an expected bout of tighter liquidity next month, the dollar crept higher against a basket of currencies despite President Donald Trump's Tuesday tweet urging for the Fed to lower interest rates and begin quantitative easing. Meanwhile, in Japan, they own 60% of their stock market, probably more like 90% of their bond market, and they are one of the biggest exporters of yen into financial markets. They are continuing to ease into 2020, which we saw in this chart, where we saw that 3 of the major central banks are purchasing assets: the Bank of Japan, the Federal Reserve, and the ECB. From the long view, other areas of potential mutual benefit are in ethanol. China wants it. We can make a lot, as well as LNG. We are currently flaring more than Norway uses in a year. I'm sure Trump would welcome infrastructure investment to capture this cheap energy so China can stop burning coal. So they're talking about buying a whole lot of ethanol in this China deal, as well as different other energy products, services. It's a sign that the PBOC remains in easing mode and may be just enough to convince banks to make another 5 basis point cut this Friday. And so we did see them inject $30 billion into their repo, similar to what the US is doing. Meanwhile, poor people around the world are revolting against their government. This is the big trend of the decade, is to strip the wealth away from the uber rich who've benefited from central banks loaning money to bankers who then loan it to corporations, which is driving huge amounts of inflation in asset prices and only benefits a small elite group of folks. Here we are in India having massive protests, Lebanon, Hong Kong. It's a worldwide phenomenon. This is from Zero Hedge. China won't rush into buying US farm products under phase 1 deal, warns US trade advisor. So we need to see around $3 to $5 billion a month of purchases from China very quickly to believe that the phase 1 trade deal is not going to upend itself and create more chaos. Which would be good for TLT and obviously very bad for emerging markets and the SPY. Struggling Chinese companies on the brink of delisting rush to sell real estate properties to bolster their books and avoid being delisted. So they have just overbuilt skyscrapers and real estate, especially for retail homes. 50 million homes are uninhabited. And they have at least 10 cities the size of New York that are just getting dusty. You can see little Chinese guys on their bikes pedaling through these massive highways, just completely evacuated. Meanwhile, it looks like China is making moves to not rely on Hong Kong to raise capital. You can see that President Xi Jinping will probably use his visit to Macau to highlight a raft of recent proposed policies intended to help diversify the city's tourism and to open it up as a financial center. So they are also opening up how much yuan can be brought over to Macau. I'm going to skip the stuff on Huawei. We have Rosenblatt going bearish on Apple because of the 30% decrease in sales in China. Now, Apple's doubled this year after that horrific sell-off, which you can see began in October. And that again was when yields on bonds got too attractive. Money just dropped right out of stocks in a heartbeat to get those guaranteed profits. And now we can see China's slowing down in just about every metric possible, including looking at sales in Apple. So I only pulled that up, not because I think Apple will crash 50%, but because it's another indicator that China is indeed slowing down. Here's China's headline sales going into negative territory below 50. Here's what we're supposed to pull off in exports to China in agriculture. Doesn't seem realistic. It's far more than we even produce currently. So we'll see if they can live up to this phase 1 trade deal. If not, then we got to look out for more escalation in the trade war. which could be coming in a few months. Disney started to make a multi-billion-dollar movie trilogy without an idea of how it was going to end. They have literally been making it all up as they go along, hoping obvious plot holes can be plastered over with special effects and marketing, a bit like central banks. Just a funny tweet there. FedEx CEO, the industrial economy does not reflect any growth at all worldwide to speak up. It's all stock buybacks. Here's a look at the FedEx stock against S&P 500, also potentially warning of slowing growth. So why are we betting up on the SPY if we know the world's slowing down? And that's because central banks are printing massive amounts of liquidity, and this is highly correlated to the stock market going up. We've got the House voting on impeachment today. Trump wrote a 6-page letter to Nancy Pelosi. Didn't have time to read that yet. Rabobank, there looks almost certain to be no policy payoff for markets to worry about this epic impeachment saga, except for perhaps enthused Republican voters and make Trump 2020 more, not less likely. This has sparked up people. Pay close attention. There's someone who always comes in and buys tens of millions of dollars worth of the 50-cent VIX call options, and he has reemerged. It's been very interesting to see how accurate this volatility whale is. Probably it's a major bank, maybe even the Bank of Japan buying these. Again, they can't sell their securities. They're just too large. So they're just trying to reduce the volatility in their portfolio with the VIX. So if you're in our boot camp, we're still long a 35 call expiring in April. And we will add to that position most likely this Friday or next Friday. Stay tuned for timing. And now Trump's leading in the general election, according to USA Today, after all this impeachment hoopla. So that's bullish for markets. We've got a Democratic debate coming up on Thursday. We'll see if Joe Biden's really going to be the potential nominee for the Democrats, or if it's going to be someone else. Hard to say who it could potentially be, but they're looking weak on that side. A lot of controversy about how the Senate impeachment will be played out. It looks like it's going to be a quick trial without a whole lot of witnesses, but we've seen McConnell barking about the Democrats' requests over the past 24 hours. And that is our top trading news today. So let me see if we have any other questions, and I'll pull it back to Dean.
Okay, Jason, we had 6 questions come through the chat, and I think I've addressed them for everyone at this time. Didi, does that make sense to you? Let's see here. Ash Khan, did that all make sense to you folks? Cool. And guys, I know we cover quite a bit, in these presentations. So I want to definitely just announce my number really quick, save it. And you can always call me after the webinar too. Just if you have any additional questions about the strategy, why we do what we do. That number is 505-322-7515. And feel free to call me at any time, folks. That's my cell, okay?
As soon as tomorrow.
Okay, I do see DD Chen has their hand raised. If you have a question, please feel free.
And the gains in this stage are enormous. KHRN, 3,180%. TGTX, 3,277%.
Hey, JJ. We got Fred Cook listening to some penny stock scam stuff.
Oh, no. Okay. Well, I'll go ahead and mute everyone and put the presentation back on you. Okay, Dean?
Okay, sounds good.
Okay, I just made you host. I think you do need to unmute your mic, though.
Okay, cool. Sounds good. All right, guys. So I'm just going to jump into this here. And just kind of finish going over, what we do and what we offer to our clients. So I really think, folks, the number one thing I could think of that really pins our methodology, and what we do for our investors is really simple. It comes down to capital preservation, okay, and slow defensive growth. Okay, so I've read all of Warren Buffett's literature, had an absolute blast doing so, and I will never forget reading his two most important rules of investing. Okay, rule number one: never lose money. Rule number two: don't forget rule number one. Really simple, but so many people try to come into the markets, go gamble with their capital, and it's absolutely the worst thing you can do. You're gonna lose big. That's why they call it the big casino, right? But I really think what our service does exemplifies this rule. Okay. Now,
Oh, Dean, do you want to put your screen on real quick?
yep. Sorry about that. It's the technology's switched up a little bit. I think there's an update. So sorry about that, guys. So let me go back to that really quick. And so just real quick, I was talking about Warren Buffett's number one and number two rules. Really simple. Number one, never lose money. Rule number two, don't forget rule number one. Super simple. Okay, guys. So we've kind of gone through the trade alert, the news, the questions from our audience, and please feel free to type some in the chat box if you have more. I'll get to them after I go through the value we provide our clients. Okay. So number one, and we have two options. Okay, guys. And I know a lot of you today said, you weren't familiar with options, and that's totally okay. Okay. So the first option we have that's been the most popular so far is the service. Okay. And I'm going to go through our commitments to providing unmatched service. And with the service, we're going to hand you the fish, okay, to where all you have to do is, cut it up and eat it. Okay. Now in the boot camp, we're going to teach you how to fish. Okay. And so you can become a pro at defensive investment. And the really cool thing about the boot camp is all of these other publishers are missing the big picture and helping people understand how the financial system works and why it's the best decision to be defensive with your investments. Okay. That's huge. And it's one of the things I've learned throughout my lifetime is the moment I became more defensive with my capital and my investments, the more consistent I've been and the more I've grown my money. Okay. Don't really care to gamble anymore. It's just, I really love the defensive approach. Okay. I worked really, really hard to get the nest egg I have. The last thing I want to do is go destroy 25% of it in a stupid decision. Okay. Number five, we do have a bonus for clients that do sign up today, and I'll go over that in just a moment here. So let me go ahead and go to the next slide, and I'll just cover this really quick, but here's a couple of things that you're going to need to get the most out of the service. Okay, obviously you're going to need a brokerage account set up to follow our trading plan that has option trading enabled. Okay, you can use real capital or simply paper trade. Then you can see how incredibly easy it is to give your hard-earned money the protection it deserves. Our minimum allocations, okay, we'll need $75,000 for the full system, and that's going to give you a huge amount of protection, okay, that you I guarantee you don't have in your portfolio currently. The light system can be followed for $35,000. So there's kind of minimum allocation, and really, folks, we have clients following this from as little as 35,000. Well in excess of $3 million. Okay, so if you fit anywhere in that scale, we would love to help you and help train you. Okay. Number two, the ability to take 1 to 2 minutes to follow our trade alerts released daily at noon Eastern Standard Time. These alerts are by no means time sensitive at all. They simply need to be placed before the market closes at 4 Eastern Standard Time. Okay. And as Jason touched on earlier, you don't want to just own the ETF. You want to wrap that option call around it so you add another layer of security to an already defensive portfolio setup. Okay. Mobile phone, you're definitely going to want to receive our text messages. Okay. and you can place the trades with your mobile brokerage application, literally from anywhere in the world of service, airports, restaurants, in a car, anywhere. I've done it from a bus. I've done it from an airplane. I've done it from a boat. Pulled my car over to the side of the road. I've been on a walk in the afternoon and a place to trade. So as long as you have a cell phone with access to signal, you're good to go. And for some reason, if you didn't enter your cell phone number when you sign up for the trial, you must email Ryan at portfoliobuilder.io and send him your cell phone number and just say, hey, Ryan, I use my landline when I started my trial. Can you please add this cell phone number to the list? I'll be happy to do it. Okay. An email provider that's in good working order. Pretty simple there. We're also going to send our email, our alerts via text and via email. So it's good to have both. And then you're always able to join our webinar from the email exclusively. So if you want to come back tomorrow, please feel free to do so. Just grab the link from your email each day, and that will bring you into this presentation. Okay, so this is what's going to be provided to you at no cost during your trial. Okay, number one, daily trade alerts delivered at noon, Monday through Friday. Okay, the alerts will be sent via text message and email each day, Monday through Friday. We engineer our positioning in coordination with the financial system and macro environment. Plus, we really look at where Wall Street is betting and why. Okay, and we teach that part of the secret sauce in the boot camp. We watch the market 18 hours a day, 6 days a week, so you can enjoy your life. Okay, folks, we want you to enjoy either your retirement, your semi-retirement, or if you have a job, you're making good money full time. Take 10 to 15 minutes a month to replicate what we're doing to make 15% a year. It's for me, I look back at it and I look at the amount of time that's allocated to making 15%. It's phenomenal what you're making per hour. It's unbeatable. Number two, we trade the SPY at a 40% allocation Monday, Wednesday, Friday. Okay. Number three, we're going to trade the EEM on Tuesdays. Number four, we're going to trade the TLT at a 40% allocation and GDX at a 10% allocation on Thursday. Okay, so number two and number three, think of that as a risk on allocation to the market. Think of number four as risk off. Okay, so you're balanced 50% risk on, 50% risk off. World War III starts tomorrow or overnight. You're literally going to wake up with more capital in your account tomorrow because of the way we've balanced the portfolio. And then we add a whole nother layer of protection on top of that with the option strategies. Okay, so literally, if the World War III started overnight, and that literally happened after you already allocated with us, you're going to wake up with more money in your account tomorrow than you have today. You're going to have bigger things to worry about, but you're going to have more capital tomorrow than you did today, and that's super important. Okay, daily live presentations with a live chat to ask questions at 12:05 Monday through Friday. Okay, you can access the live presentation from the email we send out each day. Simply click on the image that looks like a YouTube video. Please ask any questions to Jason, myself, or Victor live during the presentation. Just click the chat icon and type in your question. Okay, and we have live Q&A opportunities for 1 to 2 hours every day, guys. Unlike any other service out there, we connect with our clients on a daily basis to ensure superior communication and white glove customer service. Okay, guys, so do not be shy about questions. There is a lot to understand about what we do, okay, and why we're so defensive, but please at any time, just hop in, okay? Now, this is going over our allocation here, and I always like to recommend to people, if you start with a $300,000 allocation to the system, okay, and you follow that during our free trial, over 30% of the people that are paid clients now have made more than the cost of their service during their trial. Okay, and there's not another publisher out there that's going to literally give you every part of their service completely for free for you to utilize during the trial. Okay, we love to do that. That's a phenomenal way for Jason and my team to build trust with our investors. Okay, and we ask for a little bit of your time to join us during the webinars, but we know in time that will pay off in spades. as we're able to, in the most offensive manner, slowly grow your account, okay, and educate you on the financial system, okay? And, you know, and hey, it's totally okay if you don't want to do the 300K. You can just use 100 shares and use 200 shares of, or 100 shares of SPY, 200 shares of everything else. But this is what I like to recommend. Literally every single person that started with 300,000 bucks at the time that they started their trial has made more than the cost of their system if they followed it properly. Okay. And you know, one of the things I definitely want to reiterate, folks, is definitely feel free to save my number. Okay, it's in the bottom right-hand corner. My name's Dean. I'm an investment consultant here with Portfolio Builder and a partner. Just call me with any questions along the way. If you want me to take a look at your portfolio, I would love to do that for you. Love to see if maybe, number one, you have too much risk. Number two, if you're under allocated, or you know, I've talked to a lot of people that just have a bunch of cash sitting on the sideline that's getting burned up. And at the same time, conversely, I've talked to people that are just in speculative stuff that should never be in anyone's portfolio, you know, after the age of 50. So would love to work through that process with you, get to know you a little bit, understand where you've done well in the market, where you struggle, so we can identify how to help you best. And so the one last thing I do want to mention, folks, is we are doing a special today. So if you do a combination of the service and the boot camp both, we actually have a 50% option, but that is going to end today at 6 Eastern Standard Time. So if you wanted to take advantage, if you've been thinking about doing this and you want to wrap up the service and the boot camp together, I have a 50% discount today that will expire at 6 Eastern Standard Time. Okay, and let me see if we have any questions here. Let me pull that screen back up, and let me just see if anything else came in. Okay, it looks like. Can I turn up the volume? So no, our volume is as loud as it goes, Anonymous, but you can certainly try to turn up yours on your screen. So sorry, I can't give you a better answer for that, but unfortunately I cannot. Okay. Let's see here. Now, a couple of quick questions out there in the audience. Does anyone have any downside protection built into their portfolio at the given time? Is there anyone out there that has that built into their portfolio? And what I'm gonna do, folks, is I'm gonna go ahead and unmute everyone and let anyone chime in. But if you have some background noise, I will mute you immediately because
for 5G devices with applications in smartphones, Wi-Fi routers.
Okay. Sorry about that, guys. Had some person with background noise there. Okay, Tom, I'm gonna try your microphone one more time and see if it works here, okay? Okay, so everyone has been muted that doesn't have background noise going on. Please feel free to jump in, have any, Dee Dee, did you have any questions? Did those explanations make sense for you, ma'am? Hey, Chip, thanks for joining us today. I think this is your first time here. Do you have any questions for me, bud?
Exponential type investor. So how much does a 1-year membership cost? Let me.
Sorry, someone has a penny stock pumping up thing on their computer.
Oh, I think they actually asked what a 1-year membership costs. I'm not sure who asked that. I did hear
No,
that.
it's part of the same video they've been playing, Jay.
Oh, okay.
Yeah, it was promising 2,700% returns in 48 hours. It's pretty funny.
Oh, nice.
Gonna give it all to the casino.
Yeah.
All right, folks. Any questions out there? Please feel free to unmute your mic. Go ahead and interact live with us here while you have the opportunity. Dee Dee, I see you still have your hand raised. Do you have any more questions?
Actually, I'm new to option. So
Let me pull up the boot camp. So maybe Dee Dee could see the value in that. I'll put the screen back on me for a minute, Dean.
Okay.
Yeah, so if you're just getting started, Dee Dee, this may, I'm sure you look at the trades and you can understand how they work, at least from afar. Let me just take over the host.
Yeah, and Dee Dee, the most important thing to know about why we use options is to literally just add a second layer of security for you. Okay. Because options can be risky if you're not utilizing them in a smart manner or in a defensive manner. But every time we're utilizing the option strategies we're literally using it to provide additional downside protection. So it's a good overview of kind of the methodology of why we're using options. Okay.
Yeah, absolutely. So yeah, there's most people use options to speculate and try to get rich quick. And good luck to them. They've probably done all right this year buying call options. But most of the time it just doesn't pay off. They didn't build Vegas for free. And the big money banks selling call options aren't losing money either. I'll just say that. But if you feel like this is something you do want to do, you're just not quite sure you are confident in your skills, and you want to really understand everything about stocks, bonds, and options, you might consider our boot camp. And now if you do upgrade your advisory free trial, we are throwing in the first month of the boot camp for free. And we could also extend that lifetime package Dean was talking about for the 30 days. So if you just wanted to kind of limp in with a discounted annual membership, try out everything for 30 days. And then if it really looks like this is something you want to be doing for a long time, and we have about a third of our clients actually have committed to a lifetime membership. That's how dedicated our clients are to following this program. Because they see the results. It's very low risk. We're not getting clients rich, but we are generating consistent returns with very high probability. And so here's a look at our boot camp that might be of interest to anyone who feels like their education's just not on par with all the things we've been talking about today. Okay, so the first module is the big picture. We're going to look at the overall strategy. More importantly, we're going to look at about 100 years of history in America, what's happened with interest rates, and how we can look at interest rates and Fed policy to predict the stock, bond, and gold market quite accurately. Okay, so you'll get the big picture, probably more important than understanding the technical aspect of the options, but that's our first module. Very interesting. It's about a 2-hour module you could watch immediately after you join. The second module, I actually have broken into 3 pieces. So we're going to teach you futures, Forex, and options trading. And this has been split into 3 modules. Each module is about an hour and a half. It's not like the encyclopedia of how to trade these markets. It's exactly the opposite. It's more like a cheater's guide to completely understand and follow the trade alerts I'll be issuing. So we're going to cut out anything you don't need to know and just laser focus on what you absolutely need to know. Now in module 2, it's much more about how to place each type of trade. For the normal advisory, we're only trading ETFs with options. In the boot camp, we provide more advanced trades where we might take advantage of really shorting the Chinese currencies, the big opportunity that I think is going to be very lucrative for investors over the next several years. So that's covered in module 2. Module 3 and 4 are dedicated to understanding call options in great detail. So this will be more like tennis practice than a lecture. So you could sit there and watch, a pro tennis player spike the ball all day, but that doesn't mean you're going to be able to do it. So think of module 3 and 4 as practice, live quizzing. So I'll be putting up slides with the question, asking you to take the answer on your paper, and then the next slide will show you the answer. And we're going to be very repetitive until we really just bash this into your head inside out, so it feels like it's second nature to you. Module 5 and 6, just like that, but dedicated to put options. So we're going to understand being longer short call options and being longer short put options. Module 7 and 8, we're going to tie it all together. How are we going to use put options and call options at the same time? How do they work together, especially when we actually own the asset? So 7 and 8 are going to tie it together. Module 9, all about how to get your hands on cryptocurrencies. Right now, crypto's at a severe discount. Now, we recommend a tiny 1 to 2% position in this asset, and it's a long-term buy and hold. We've done very well this year on that part of our portfolio. It's very confusing how to safely play crypto. We will take all the confusion right out and make this as painless as possible if you do want exposure to that. Module 10 is how to use our spreadsheet. So if you like the accounting system that shows you the monthly loss and gain per strategy broken down on a month-by-month basis and by asset allocation, then you're going to want to use our spreadsheet. So we do give you a copy of the exact same spreadsheet I use, which you can fill out to keep detailed accounting of your returns, just like I am. You'll have the exact same accounting that you see in our daily emails on your own. That's going to cover the next 3 modules. So we're going to essentially just be filling out your spreadsheet together for those 3 modules. And that will put you through the process of essentially 6 weeks of trade alerts being put into your spreadsheet, and also cover how to close out and open up a new month. Okay, module 13, we're going to talk about financial crises, how we can take advantage of that in our portfolio. Module 14, we're looking down the road. What happens after the bond market and stock market have had a reset? Are there better investments to buy? Well, sure there are. And so when we come to that point in time, you're going to want to know what to do after a great reset. So that's module 14. Module 15 and 16, we're going to get into what I call advanced options trading, but for most of you, this is basics. We'll talk about spreads in module 15. So that's when we're combining buying and selling an option at the same time without owning the underlying asset. So it's primarily for hedging or speculating on big moves in an underlying asset. And then module 16 will teach you everything you need to know about writing put options, why we usually don't do it. However, we did do it today. And that wraps you up. The whole boot camp does repeat itself over and over and over again. This allows me to update each module and build upon each module over time and relate it to what's going on in the markets today. So imagine by middle of next year, how violent the political scene will look between the Democrats and the Republicans. Will the China actually be living up to its agricultural product purchases? Are we going to be in a new trade war with the European Union? There's a whole lot of risks out there that will be very interesting to see how we can reapply the same materials to different market conditions. So it's a one-time purchase in the boot camp, and you're invited into this program for the rest of your life. Essentially, it's a webinar on Monday, every Monday, where it's Q&A. This allows me to catch you up on all the past content and also go over all our exclusive bootcamp trades. And then every other week, we're doing a module lesson. And that's where you're going to get to learn new materials. You're going to get an email with your homework after each module. And every time we complete the 16 modules, it's now actually 18 because I did expand the module 2 to have one for Forex, one for futures, and one for options. So it'll continue to repeat over and over again. If you feel like you didn't quite get all the concepts the first time around, well, don't worry. You're going to be getting this over and over again. So there's trade alerts that are exclusive in the bootcamp that are designed to be higher risk, higher reward with small amounts of our capital. Plus, there's a phenomenal education system that's far better than anything I've seen. Anything of this level at other option coaching programs are running in the what have we heard, Dean? Someone told us they're selling these for 50 grand for a one-time, like 4-week option class at some of these places. So this is a lifetime membership in our boot camp. It costs a fraction of that. And it really will ensure that not only do you understand the technical aspects of being able to place the trades, more importantly, you're going to understand the how the trades are designed and what goes on in the economics and politics that really help us predict these markets. Because once we can predict the markets, designing the trades is easy. If you can't predict the markets, you could go design trade alerts all day, but you're probably going to end up losing money. So that's why I definitely urge you the second you join to watch module 1. And that's really going to spell out how you can ignore 99% of all the data out there that could be confusing you and realize what should you really be focusing on to predict the stock, bond, and gold market. See, we have any other questions out there?
Yeah, Jason, there's one in the panelist chat box here. It says, got a question. Today we sold the SPY shares and did the options trade. Took a lot of risk off and just spend around $1.01 per 100 shares. Left us in a lot of cash.
Right. So we have a lot of cash, but that cash is, it's, let me pull up the trade. So yeah, you nailed it. But you got to realize the reason we're in a big pile of cash is because we have to be able to purchase 100 shares at 318 because we sold that put. Now that's not really true because we covered our position with that 316 put. So it's not really a naked put option strategy. A lot of people would look at the trade we did today and they would have only sold the put. They wouldn't have given up a third of that put option profit by buying the out of the money put. That's not our strategy. We would much rather take less risk and generate a slightly smaller return because we understand that there are tremendous amounts of leverage in all of the different markets you can invest in today. And that's due to 5 years of interest rates being at 0% during Janet Yellen and Obama's little bank bailout from 2009 through 2014. The world just accumulated so much debt. It's just amazing. And this is what's forcing interest rates to go lower and lower, is just to try to service those debts. All right, guys. Well, any other questions? Let's see, we got one in the chat box. Is this because you think the market is going down? No, I think there's, at any point in time, I think there's a high level of risk in equities and bonds because we've grown such a large bubble. But no, right now I'm predicting SPY with volatility. I'm not saying there'll be no volatility, but I do believe the SPY is headed significantly higher. What's the rationale? Oh, yeah. So the rationale was to, the put option was overpriced because of the dividend on Friday and because the banks are unwilling to write put options because they're so low on cash going through the tax season that there's this huge fear that banks could potentially not have the money to loan to the broker dealers who then, of course, loan it to these hedge funds that are using like 5 times leverage to do just what I'm teaching you guys. Yeah, most likely we will be back potentially even on Friday to our normal trade. But this trade setup is beautiful. We've never had a trade setup with this sort of risk reward ratio. So you can see we can lose $2 on the SPY and break even. If the SPY travels higher, we're outperforming the SPY 2 to 1. And if the SPY drops by $4, we're only losing 50% of that. And if it drops by $10, we're only losing 30% of that. Now, if it were to drop $20, which would be a pretty horrific crash, we'd only lose 15% of that. Our losses stop at $2.95. So we're essentially forgoing the dividend payout on Friday to have a much lower risk trade setup than we would have if we were just simply doing our normal option caller. And also there's what's called the quad witching on Friday, which means 4 different premiums are expiring at the same point. And this creates a whole lot of volatility. It's hard to predict if it'll go up or down, but that's another thing I'm concerned about. So you can see we really have the best of both worlds. If market goes up, we're going to do very well, better than buy and hold investors, which we normally don't. But yet, if we travel lower, the first $2 we break even. And after that, we lose far less than normal buy and hold investor. So this is not a setup you can get every day. So we'll probably be back to normal on Friday. All right, guys, I'm gonna go ahead and wrap up the trade alert. We've gone for 2 hours. I appreciate everyone joining us live. Tomorrow we'll be playing the TLT position. My expectation is to continue holding. We're long a put. So we have a married put. We're long the TLT and we're protected to the downside. That put option is up significantly currently. So we'll look at potential moves for that trade maybe next week, but I think we'll hold on to it with no changes tomorrow. So we'll keep a lookout. There's a small chance we'll take a profit on that put and readjust to a cheaper put option, but we'll play that carefully tomorrow. All right, guys, thank you so much. Appreciate everyone taking the time to join us live, and we'll see you tomorrow again. Same place, same time. And tomorrow we trade TLT GDX. So thank you.